movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Republican Donald Trump and Democrat Kamala Harris sparred for more than 90 minutes in a head-to-head contest last night that ended with prediction markets showing positive signs for the vice president. Now, the two candidates clashed on issues ranging from abortion to Afghanistan to the economy, just as early voting is set to get underway in the first states.
Let's talk about what Donald Trump left us. Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War. And what we have done is clean up Donald Trump's mess.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history. We were at 21%, but that's being generous because many things are 50, 60, 70, and 80% higher than they were just a few years ago.
Now, for more, let's bring in Bloomberg's Vonnie Quinn from New York. Vonnie, I know you've been up all night. It was a quite enjoyable debate, actually, to watch because it was exciting. It was spicy. What were your key takeaways from the debate?
Yeah, I mean, I think if you were to pick a winner, and we tend to try and pick winners in these things, right, Francine, the consensus seems to be growing around the fact that it was a Kamala Harris win. Mind you, it was possibly something that she had to do in order to prove herself to the American public. She hasn't so far fallen on her face, let's put it that way. Every test that's come her way, she's managed to meet it, this included. That doesn't really mean anything for the election, though. We're not seeing those polls shift in any significant direction towards or away from either candidate. They are neck and neck right now. It will be interesting to see, though, if fundraising does continue over the next several weeks, as it has been, because in August the Harris campaign raised 3 to 1 times the amount of money that the Donald Trump campaign did. So that's an indication of where momentum lies. Then with the Taylor Swift endorsement just coming less than 10 minutes after the end of the interview, you have to imagine that that's going to help the Democrats with the narrative into next week and beyond. There were some very interesting moments too where Kamala Harris did manage to bait Donald Trump, and remember, he had been told by aides not to go personal, to stick to policy, but she did mention the size of the rallies, for example, and how people are leaving because they're bored, and you could tell that that got under his skin. He also went on a long diatribe about Viktor Orban in Hungary and how he thinks that China is afraid of Donald Trump, and there were some very unusual moments, but Donald Trump certainly thought he was the winner. He appeared in the spin room afterwards, which candidates typically don't do, and told everybody who was listening that he had won the debate. He's also appearing once again on Fox in about 2.5 hours' time.
Okay, Vonnie, thank you so much. Vonnie Quinn there with the very latest on the debate. It'll be also interesting whether there's a second debate before that November 5th election. We'll have plenty more on U.S. politics later on in the program. Now, traders also awaiting U.S. CPI data later. Meanwhile, the yen gained after a Bank of Japan official signaled more interest rate increases. Well, joining us now, Janet Henry, Global Chief Economist at HSBC. Janet, I mean, one day it's inflation, the other day it's some of the PMI numbers. Like, what kind of state is the U.S. economy in?
The U.S. economy is certainly faring better, at least in terms of the aggregate picture, than pretty much any economy in the world. In fact, if you look at U.S. growth compared with growth elsewhere, it is certainly a bit stronger. But it is in better balance, which, as you say, it's always been about inflation and unemployment and, I think, well, the labour market. And Powell made it very clear, particularly at Jackson Hole, that it is in better balance. And now everyone's positioned, is it now we can just completely forget about inflation and just be about the labour market? Or is there a risk that something happens on inflation which has to temper the pace at which they can slow the pace, well, deliver the rate cuts?
Janet, do you think that there's just too much focus on, I mean, I know the Fed is important. I know it's important whether, you know, they front load or whether they actually space it out. But does it make a huge amount of difference on whether they're even a little bit late to the game in cutting interest rates to the overall economy in the next 3 to 4 months?
In real terms, no, it doesn't. But of course, particularly when every central bank, particularly any G10 central bank, is talking about data dependency, the markets react to it. And as much as we say the market, it is no one market. You know, that is the average of all of these different scenarios. So if you look at what's in market pricing, it's about 10 rate cuts. There's probably no one that expects 10 rate cuts. They probably expect 3, 4, 5 or 20. and it's just the average of where they go. But, you know, this was the topic of debate at Jackson Hole, remember? It was, how is monetary policy working? Does one or two rate cuts, does it impact on the way it has in the past in terms of credit flow and the real economy? So I think there probably is a little bit too much focused, but it does have implications because of the way it impacts on markets, both equity markets but also the bond market, because that too influences the real economy.
But is there more of a chance that we don't have a soft landing than what markets are expecting? Again, policies could change. We could talk about trade tariffs. There's concern about the price of oil being almost an early indicator of something being imported from China.
Right. Well, again, you know, we talk about hard landing, soft landing, as though there is a textbook definition of one and a textbook definition of the other. And we've only had one genuine soft landing, and that was in the mid-1990s, when in total the Fed only cut 75 basis points. Everything else is loosely described as a hard landing. A hard landing is usually when you get a rise in unemployment and you get a consumer recession. This has been a highly unusual cycle. We don't normally get a jump in unemployment when payrolls are still running at over 100,000. So it is a very unusual cycle. Everyone knows that, and yet they keep trying to force the scenario into something we've seen before.
But so how would you describe it? I mean, it's basically, it's almost like business sentiment, right? Because I keep on being told by chief executives that once the cut comes, the animal spirits of the U.S. economy will be unleashed. I mean, they've been unleashed already, haven't they?
Well, they have. But again, you've got enormous distributional differences. Right. We know that there are some U.S. households that have been in recession for the last 2 years. The aggregate picture looks very good. There's been a lot of deleveraging, and actually the savings stock is still quite high, and it's the high-income people that make up more of the broad consumer spending. And the corporate sector looks in very good shape. Particularly the S&P 500, but only 20% of people work for the S&P 500. So, yes, I think it does matter for sentiment. People get more optimistic about the future. We are not expecting a familiar U.S. recession. We are not forecasting a consumer recession, but we do have a further modest increase in unemployment. So, yes, it is important for sentiment, and particularly for what companies do regarding hiring and indeed layoffs, which at the moment are still very low.
Janet, what are you expecting from ECB? So there was a lot of data points over the summer for Christine Lagarde to look at since that last cut in June.
Yes, you're right. That last cut that was subsequently described as the reluctant cut. We're cutting, but we're not sure we really should. So I think it might be a bit the same. You know, it will be absolutely, we're going to get a rate cut. It will be 25 basis points, but absolutely no guidance whatsoever on the future pace. You mentioned the oil price and China demand. The oil price is lower. The euro is stronger. That should be an impact, you know, on inflation, you know, help it to continue to disinflate. But we've had these really sticky inflation readings, haven't we? You know, stubbornly sticky service sector inflation and the fiscal. You know, we know that there are these global forces in terms of weak global growth pushing down the oil price. But if governments, this could be in the US as well as Europe, if governments are going to have looser fiscal policy, that makes a difference to the inflation outlook next year and how much they can continue to ease policy. So expect some comments, not just on slight lowering of their forecast for growth and inflation, but what they say in any terms of fiscal warning and the need to have an ongoing fiscal consolidation next year.
I mean, we also had the Draghi report, and that was like, you know, Germany poured cold water, I think, immediately. I'm not sure they even had time to read the 300 pages that was in it to pour cold water on it. Yeah. What's the way forward for Europe economically in the next 12 months?
Well, Europe has a low potential growth rate. We know that it has a demographic challenge and investment has been too weak. So it's very difficult to get productivity growth when you haven't had much investment spending, and you also need to do more on skills. So in terms of the Draghi report, you know, it ticked all the boxes of what Europe needs in terms of improving competitiveness. But of course, it does require money. So as much as there is some support for a certain degree of deregulation, there's also a few protectionist types of measures in there. Anything that talks about hundreds of billions of dollars and any kind of joint borrowing, politically, that is the challenge at the European level, and that's what they will need to overcome in the coming years to ensure that it gets on a firmer growth path.
Janet, Bank of England, I mean, they're left actually with an okay economy. It's something that maybe we weren't expecting 4 or 5 months ago.
Yes, it has been, I guess, something of a surprise since the start of the year.
Yeah.
You know, Europe generally, including the UK, was stagnating in the second half of last year. And certainly in the first half of the year, the UK, we did get quarterly growth rates in that kind of 0.6% range, which is pretty good. The monthly data grabs the headlines, but monthly data is still quite volatile, still kind of quite experimental. But it has generally been on an improving trend. And obviously the budget's looming at the end of October, and there's a lot of headlines in there about the extent to which taxes may actually have to be raised. But the fiscal dynamic for everyone is very, very big, and they won't want to do anything that really causes the growth rate to significantly falter. And the Bank of England, Bailey was a little bit more cautious than, for instance, Power was at Jackson Hole. We are looking for further rate cuts, but September probably will be a close call, and we do have the new member at the Bank of England, but we think it's much more likely that they wait until November, because by November they'll have had the budget and have a better idea, and indeed will have had the US election, so they can make a more informed decision, as well as look at all of this array of labour market data, which is all pointing in different directions in the UK at the moment.
Janet, as always, thank you so much for joining us. That was Janet Henry, Global Chief Economist at HSBC. Now, coming up, we speak to Andrea Illy, the chairman of illycaffe, about coffee prices, what else? Coffee prices, but coffee changes, climate change, and sustainability. That's next, and this is Bloomberg. Well, coffee futures have rallied further this year after deadly typhoon battered parts of Vietnam and dry weather looked set to persist in top exporter Brazil. Now, up and down the supply chain, sellers have been raising prices and scrapping discounts to protect their margins, and many warn of more increases ahead. Now, let's discuss all of this with Andrea Illy, the chairman of illycaffe, which uses high-end Arabica beans rather than the more budget-friendly Robusta variety. Andrea, as always, thank you so much for joining us. Everybody knows pleasure. I'm a coffee lover, so that's my disclaimer. But coffee prices have definitely been more expensive for the most part of the 3 years. When do you expect prices to normalize a little bit more, or is this a new normal?
Don't know. It became a climate-driven market.
Yeah.
Every time you have the Niño, and we're just finishing the Niño 2024, you have drought, which is triggering high prices. So drought was in Vietnam until a few months ago. Now it's in Brazil. 130 days without rain. Yeah. And they still don't have weather forecast predicting rains. So until the weather forecast doesn't change, there cannot be any estimate about the future crop. And so the price will never come down. Also, in Vietnam, there has been a typhoon, which impacted with we don't know how big damage the crop. So,
Andrea, can you continue actually increasing your prices and passing some of that higher cost to consumers?
We already reached this kind of high prices in the past, and then it came down. So we are still in a, let's say, zone where we can manage, also periodically, temporarily absorbing some of the kind of marginality shrinkage. However, over the long term, we have to take in consideration the very bad, vicious circle that this climate problem drives. Yeah. Because there is poverty, which prevents coffee-growing countries to invest in resilience.
Right.
And climate, let's say, prevents production, damaging quality first and quantity, and this makes the circle becoming vicious. So prices needs to go up so that we increase the capacity of the market to pay higher prices for the coffee we buy from producing countries, allowing them to invest in resilience, in adaptation to climate change.
Andrea, I mean, I have a million questions actually to follow up on that. But first of all, you know, Italy for the G7 presidency is also putting coffee culturally at the center of trying to get value chains, and you know, this comes at a time when there's also an EU deforestation law, which means that you need to trace coffee beans. So how does the operational things for value chains and coffee chains change under those initiatives?
Yeah, I will start from the UDR that you mentioned, because this is an additional element of difficulty. You already have climate change, you have poverty as underlying problems, and then the coffee industry is additionally hurt by this regulation. This regulation have a very noble intent, which is conserving the environment, from which we rely upon for our ecosystem services. The question is that coffee is nearly zero, to my knowledge, deforestation. So it is severely impacted without a reason, because actually there is no forestation related to coffee. This will have to be proven, but we will have to prove it afterwards instead of proving it before, and possibly avoiding putting coffee in the list. Now, the question is that the complexity of this UDR makes exporting countries makes it impossible for them to comply. So we still don't know, because the regulation is expected to become effective end of the year, and we still don't know the procedures, the KPIs, the reporting, the certificates, all this needs to be finalized. So very pragmatically, I think that we have to consider the potential very bad social impact, because there are millions of growers which depend from coffee as a cash crop. That will be hurt if they are prevented to export to Europe. And Europe is the #1 in the world coffee region for coffee consumption, with 40%.
Andrea, the intention is a good one, though, right?
The intention is good. We need to manage the implementation. And my recommendation, pragmatic, is, okay, start the regulation in January 1st, but introduce a trial period, maybe 6 months, 1 year trial period, by which we can finalize all the procedures and make the system work for exporting countries as well as for importers.
And Andrea, can you talk to me about this private-public fund for sustainable and the value chain? How do you see that actually working?
Italy reacted very strongly, and I think it's a very first time in history that a country takes such a positive, bold move in favor of coffee. The first move has been with the Piano Mattei, which is a climate fund in Africa, so that can create economic development in order to, create prosperity in Africa. And as coffee had a proof of concept, which has a project made between the Italian corporation Unido and illycaffe in Ethiopia for developing sustainable value chains, and it did deliver this project. The idea of the Italian government scaled it up. More money, more project, more impact. But as they were working on this Piano Mattei, and the Italian presidency, is that why don't we ring the bell that this is a critical problem for coffee, but also for the rest of agriculture, and we put it on the agenda. And this is what happened. So in the final declaration, in the communiqué of the G7, the G7 requires governments to study solutions to make the coffee supply chain more sustainable, including studying a private-public fund for building resilience.
Which is why you're in London. This is
Which is why I'm in London. There is a consultation process between the Italian government and the private parties of the International Coffee Organization, how to finalize these funds.
Andrea, thank you so much. As always, next time we have to have an espresso shot together. Andrea Illy there, the chairman of illycaffe. I know he'll come back and we'll talk a little bit more about some of these initiatives. Much more to come, and this is Bloomberg. Well, Commerzbank shares gaining as much as 16%, the most since March 2020. That's after the German government actually sold a 4.5% stake in the Italian lender Unicredit, taking the Italian lender's overall holding to 9%. More on that coming up shortly, and this is Bloomberg. Good morning and welcome to the Pulse, everyone. I'm Francine Lacqua here in London, and these are your top stories. Donald Trump and Kamala Harris clash in their first ever presidential debate, sparring over the economy, abortion rights and immigration. Meanwhile, Harris scores an endorsement from Taylor Swift. Commerzbank soars as Unicredit builds a 9% stake, making it the firm's second biggest investor after buying shares from the German government. Plus, the U.S. two-year yield falls to its lowest level in 2 years as the focus turns to U.S. CPI. The yen surges as a BOJ board member signals rate hikes are still in play. So back to our top story, and Kamala Harris and Donald Trump have sparred through their first presidential debate with the former president, often on the defensive over abortion rights, the January the 6th insurrection, and foreign policy. Now, the initial exchanges focused on the economy and immigration, with Trump attacking Harris on inflation and a porous border.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history.
Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War. And what we have done is clean up Donald Trump's mess.
Now, for more on the debate, let's bring in Leslie Vinjamuri from Chatham House and Ross Matheson, Bloomberg's EMEA News Director. So thank you both for joining us. Leslie, first of all, what did you make of the debate? Is there a clear winner?
I would say Kamala Harris. She was the one that we were really watching. She's the one we know much less well. People were looking to see how she would hold up against the former president, and really to see whether she could define more carefully some of her policies. Clearly very difficult to do, but she ran through a very large number of policies, and to her credit, started out immediately by defining herself as, supporting an opportunity economy, listing the policies that we've heard about, defining herself as a member of the working middle class. And really, when attacked exactly where we expected, which was on rising prices, which is to say inflation, she came back very hard, managed to turn it to a conversation about what she called Trump's taxes on Americans, which are to say his tariffs, both past and proposed future tariffs. I was very surprised at how little traction the former president managed to get on what seemed to be really the Democrats' number one source of sort of insecurity in this election, which is inflation. And she really managed to deflect that. But not only that, on a number of foreign policy issues, she really turned it back to Donald Trump and said, look what you did, what you left us, where we've managed to get. And made it clear that, she is the candidate that he will have to defeat, not President Biden.
And Roz, when you look at actually, what happened between the two, I think Donald Trump spoke for another 5 minutes, but actually, Kamala Harris was much more on the offensive. Did she win on policy, or was it more demeanor, or was it more that Donald Trump was not as good as in previous debates?
Well, as Leslie was saying, she did set out her stall a bit, particularly around economic policy, which is really important for those swing state voters in those, 6 to 7 key states that she needs to really speak to in the run-up to November. But it did also come down to a bit of style here. I mean, she's a prosecutor. She knows how to handle herself in those minutes. And she really did get him on the back foot, about his own record, challenging him about his time as president and his record, including on the economy. And so it wasn't just that Donald Trump seemed to be, not actually able to land those blows, but she was coming for him quite deliberately throughout and repeatedly, and getting him, a bit flustered a couple of times. So that was, again, her experience as a prosecutor coming through. I mean, I do think one thing that perhaps, some voters were looking for was a bit more detail, again, on economic policy. She did run through her stall on that and on other issues, including, obviously, things like abortion. But they want to know, what is going to be her policy on the economy if she does win in November? How is that different from the existing Democrat policies, the policies of Joe Biden, and how is she going to make individual lives better across the board in the US? So perhaps a bit more substance to come, potentially in a further debate.
Yeah, and Leslie, look, a lot of copy is being written this morning about, Kamala Harris and the fact that she, actually put Trump into a debate on her terms. But does this make a difference with the undecided voters?
Well, this is what she's really got to aim for, those undecided voters in swing states, and really also, very important for her to drive the enthusiasm of Democratic voters so that they turn out and vote. It's not only undecided, it's getting people, minority voters, white males who are registered Democrats, ensuring that they care enough, that they're convinced enough, that they're persuaded enough by her ability to lead. Not that they vote for Donald Trump, they won't do that, but that they actually vote. And so I think, whether this debate will swing that, I think it helps. It certainly has put the momentum back in her court after, a few quiet weeks, perhaps. But it's really going to be that ground campaign that will matter so much. I think she did win this debate, and it's exactly right. She put him on the back foot. And remember, she could have done more on outlining concrete policy. She covered a huge amount of ground, but a really wonderful moment for those on the Kamala Harris side of this was when, Donald Trump was forced to say he would keep the Affordable Care Act, that is Obamacare, unless he could find something else to replace it with. What is your alternative, Donald Trump? Do you have a policy? And the former president said, I have the concept of a policy. So if anybody was, light on policy detail, I think it was really Donald Trump on anything from the Middle East questions of a peace deal, whether it was how he would actually solve the war in Ukraine. None of these things did he offer concrete policies. He just said it wouldn't have happened had I been president. It happened to you, and I will solve it quickly, but very little by way of policy detail.
But Leslie, what actually sways the undecided voter to go out and vote from one party to the other, or just to go out and vote? Is it personality? Is it policy? And if it's policy, what policies?
Well, I think number one, they want to see, is Kamala Harris a strong, confident leader that they can imagine representing them personally and also leading the country. And again, when you've been the number two, especially when you've been vice president to a president who has such a deep circle of advisors, so much experience in Washington, she hasn't had the opportunity to stand up front and really define who she is. And I think that is the key thing. They're looking to see, can she do it? Is she a leader on her own terms? And I think on this dimension, she did very well. Then on policy, for many of those voters, I think the reproductive rights, abortion rights agenda continues to be a very powerful one. And she made a very strong stand on this and really put the former president on the back foot. Remember, he's tacking a bit more to the center on this now and saying he would make exceptions for rape and incest. Remind ourselves, this is extraordinary that we're having this conversation, but we are. So I think on gender and women, she was very solid. And she, again, on the question of prices, on inflation, she managed not so much to set out the policies that will reassure undecided voters, but to remind them that the alternative that they face could put them in a much worse place. The tax on American people, the tariffs that Donald Trump is proposing, I think that was very powerful. It came at the start of the debate at a moment when Americans really will be tuned in, those who were watching. So I do think that this will help. But again, it's going to come down to what happens in the next 55 days. But this is clearly a race that she has every opportunity to win. It is going to be tight. We know that from the polls.
Roz, talk to me about Taylor Swift. So she endorsed Kamala Harris with a picture of her and the cat saying, I'm a childless cat lady. But she also, I think, said, her fans need to decide on their own. Does she sway people to vote one way or the other?
Well, this is something that people have been watching very closely for, oddly enough, the Swift effect, because she has periodically waded into politics before, and she's made herself a bit of a target when she's done so, particularly on the Republican side. As she noted, she was doing this because there was a lot of disinformation about, her thoughts on the election and who she would endorse, and she felt she needed to say publicly that she was endorsing Kamala Harris and the reasons that she laid out in her statement. But she was very, very measured in what she said. She was explaining that she thought that Kamala Harris was a serious contender and why, but she would, she doesn't want to tell her fans how to vote. She was explaining why she was going to vote in a certain way, and particularly that she felt, again, to that point that Leslie was making, people need to come out and vote, and it's important to do so, even if, you think that it's a foregone conclusion. How much that impacts, it's a bit hard to say, because, again, her fan base is obviously across the entirety of the US, but is it really going to energise, again, those voters in the swing states who possibly are going to have the biggest impact of all in the end, those 6 to 7 heartland states? Is it going to drive people there to come out and vote enough for her? Or is it really going to energise people who are in other parts of the country? So the geographic mix of Taylor Swift fans, dare I say, across the US does matter in this case. But it'll certainly be interesting to see how much that, again, puts that further energy into Kamala Harris's campaign after, as Leslie was saying, a few quiet weeks on her part.
Wonderful. Thank you so much for a terrific briefing. Leslie Vinjamuri, Chatham House U.S. and America's Program Director, and Roz Matheson, Bloomberg EMEA News Director. Coming up, Unicredit makes a move on Commerzbank as the German government begins to exit the lender. We have the details next, and this is Bloomberg. Now, shares in Commerzbank are soaring after Unicredit bought more than 4% of the German lender from the government. The Italian bank now owns 9% of Commerzbank and could look to increase its stake. Now, for more, we're joined by Bloomberg stocks reporter Joe Easton. So, Joe, good morning. How big is market reaction?
So we've seen this huge reaction in Commerzbank today, Fran, over in Germany, up 15% now. This is the biggest gain in around 4 years for the company. Now, last night, we got news that the German government is looking to offload shares in Commerzbank. And then later, we heard that news that Unicredit is actually coming in to buy the stock. People really getting excited about a potential strategic partnership between these firms. They have actually commented on how they will be looking to work together. Now, remember, a few years ago, Unicredit actually looked to buy Commerzbank. That didn't go through, but people really getting excited about this today. One point to note, though, is that the German government also said it will actually exit its stake in Commerzbank as we go forward. So we will see more share sales. That could potentially temper the excitement around this. But for the moment, that is the biggest move we've got in Europe today. Commerzbank really soaring, as I say, the biggest move since 2020 for Commerzbank over in Germany this morning.
Yeah, I feel it's a story we'll talk about. Joe, thank you so much. Joe Easton there with some of the biggest stocks to watch. Now, Inditex shares actually higher this morning after the Zara owner reported rising sales at the start of the third quarter, bucking the trend of rivals hit by poor weather and choppy consumer demand. Now, let's get more from Andrea Felstedt from Bloomberg Opinion. Andrea, as always, thank you so much for joining us. So really the question is, how did Inditex manage this? It's pretty impressive.
It is, and it's linked to what we've been talking about a lot about the slowdown in luxury. Now, luxury brands have really pushed up the price of their products, and that's left a lot of white space for others, and Zara is filling that. They've still got their, cheap cheek that we know them for, but they're also elevating and raising those prices on, fancier items, basically. And so you can trade down from a luxury brand and buy something in Zara. And also Massimo Dutti, which, quiet luxury. I know it's a bit out now, but it's been a quiet luxury favourite.
Can it continue?
I think it can, yes. I mean, others are cottoning on now. Other people are realising that there is this market to go for. H&M want to try and, go slightly upmarket, get in between Shein and Zara. In the US, we've got Gap. Revamping itself, and Banana Republic. So other people are realising that there is this market to go for. But I think Inditex, particularly with its very fast, reactive supply chain, can stay ahead.
Okay, thank you so much, Andrea Felstedt there from Bloomberg Opinion with the very latest, of course, on Inditex. Now, German car makers sinking deeper into a crisis, underpinning the future of the country's most important industry. Let's get straight to Oliver Kirk, who's in Berlin. Ollie, what can you tell us?
Yeah, Francine, it's been a lot of news flow out of the German auto sector in the last 24 hours. We can start first with BMW, which is recalling 1.5 million cars due to sort of faulty brakes that they've got, they say, from Continental. And that has made them decide to cut their margin. They were targeting 8 to 10%. They're now going to aim for 6 to 7%, which is a material downgrade for this business, and a really crucial one because obviously margins are very important in the auto sector, but they're even more important when it comes to luxury car makers like BMW. On the other side of the coin, we also got news out from Volkswagen yesterday, which said that basically they are going to be suspending, they're going to be cutting, they're going to be dissolving some of the worker protections that they have had on that business for many years. This is a business that for the last 30 years has had much more worker guarantees. That is going to expire at the end of this year. That means that those jobs will only be protected until mid-2025. And Francine, this sets up a huge fight with the unions, which are really very difficult for Volkswagen because half of the board seats are occupied by representatives of workers. The state of Lower Saxony also owns 20% of this business, so they don't want to see job cuts. So this is why Volkswagen has been very reticent to take this on in the past. When they talk about closing factories and cutting jobs, it is a massive step for Volkswagen. It shows you how much of a dire condition this business is in. When you look at the market reaction yesterday, we saw basically a tenth of the value of BMW and Continental wiped off of the shares yesterday. Today, we've had a little bit of a bounce back at BMW. Continental is down again. We see Volkswagen, though, down again today, Francine. We should say that we are right now for Volkswagen within cents of the share price, the lowest price we got during the pandemic. That means that Volkswagen, once the biggest car maker on the planet, now has a market cap that is about 6% of Tesla's.
Ollie, thanks so much. As always, Oliver Cook there with the very latest, of course, on some of these car makers. Now, the other story that we're actually looking at is the UK government set to confirm a £500 million support package for Tata Steel's plant in Port Talbot. Now, this is one of the first major tests for Labour's industrial policy. The Business Secretary, Jonathan Reynolds, is due to announce the details of the package in the House of Commons today. That's according to a person familiar with the matter. Now, the £500 million of support was agreed by the last Conservative government. I guess the question is, the specific terms have not been ratified, so we'll see exactly how negotiations go on that front. Coming up, as we digest the U.S. debates, traders now focus on U.S. CPI data, which will be released later today. We'll preview the data next, and this is Bloomberg. Now, traders set their sights on U.S. CPI data, which will be released later today as U.S. equity futures slipped and bonds rose on growth concerns ahead of the U.S. inflation report. Now, joining us now is Christina Aquino, managing editor for Bloomberg Markets Today. Christina, it's a big day. I feel like it's always a big day when there's a data point that can move the Fed, but actually markets are a little bit all over the place ahead of it.
Absolutely, Francine. Of course, we had the debate overnight, so that's factoring into how markets are trading as well. But really, yes, the big thing today is that U.S. inflation number. All eyes on that because that's going to be very important in terms of determining what is the Fed going to do, not just in September and at its meeting next week, but also for the rest of the year, right? Because there's still quite a bit of a gap between what the Fed has guided us toward, which is maybe a 25 basis point rate cut, versus what markets are expecting, which is at least 150 basis point single meeting rate cut.
But so I guess, Christine, the question is, and I hear it more from market traders, that now they're trying to figure out whether the Fed is too late in the cuts. This is not something that we're thinking about 2-3 weeks. Are we going to just have these bouts of volatility as the data drip feeds in?
Well, Francine, I'm sure the Fed is hoping that's what's not going to happen. And so they really are trying to be careful in terms of over-egging it one way or another, right? And I think that's why what we're going to be seeing from the inflation data will really help with that. Because, if we do get a print as expected, which is that U.S. inflation will slow to the slowest pace in more than 3 years, then that would help kind of re-anchor or recenter some of those rate cut bets that we're seeing in the markets. But then also at the same time, I think the Fed will get a chance to kind of see where do markets really stand ahead of that meeting so they can tailor that communication. If Jay Powell needs to rein in those bets and really kind of temper the expectations of markets toward fewer rate cuts or maybe more shallow rate cuts, then that'll be very informative heading into next week's meeting.
So, Christine, in terms of asset classes, I know there's a big move on the 2-year. I mean, we have something like a psychological level this year. Is there anything else that you're watching out for?
Well, Francine, I mean, obviously watching out for, how equity markets are going to be trading this. Big convergence, really, or divergence, I should say, between what we're seeing in a bond market, which is kind of trading like it's in recession at the moment, versus stocks, which is really more buying into that soft landing narrative, right? And, of course, crypto always in focus. We're seeing those big declines again. After that debate, I think there's definitely that perception that maybe with betting markets moving towards in favor of Harris as opposed to Donald Trump, that there's less kind of impetus for the crypto industry to kind of gain favor with the president.
So, for example, these big stories like, Commerzbank and Unicredit, we've had a big move on Commerzbank. Do they is there more focus on them because they're away from the asset classes because it's a single stock? Or is it a capital markets union story? Like, how do you read it?
Yeah, I mean, very interesting. I mean, I think there is kind of a single name sort of focus here, right? I mean, it's very idiosyncratic stories. Obviously, we have big macro themes going on today, but it's still piquing the interest. And of course, Commerce is a very big name in Europe, right? And so anything that's kind of like developing on that front, obviously going to capture markets' attention. But yeah, I think, some of the moves that we're seeing today, I wouldn't put too much stock in just because so much going on today. And, things could very well change by tomorrow.
And then ECB tomorrow. Tomorrow's going to be a big day.
Tomorrow's going to be a big day.
To see how they price everything and Eurodollar. Thank you so much, as always, Christina Kino, their managing editor for Bloomberg Markets Today.